Barrick Gold Corporation, ticker symbol GOLD, or ABX in the Canadian market, has made some moves recently, and this has actually kind of saved my life in the stock market, to be quite honest with you. Everything has been going down, but as intended, Barrick was here to save my life when inflation hit the hardest. So today I'm going to be taking a look at Barrick Gold, going through some of the fundamentals. Is this actually an investment that you want to keep for longer periods of time, or is it just a temporary play for inflation? Is there a better option out there, a better, potentially better gold stock? Should you buy an ETF instead? And also I'm going to be discussing what moves I'm making in regards to Barrick Gold. First of all, I want to discuss like my position in Barrick Gold right now. I have quite a huge chunk, to be honest, because I was very worried about inflation. And this worry of mine started around back here. I think I bought at like 2020, right? I bought here somewhere, and then it went up. I went up 20%. I was happy. I was very happy. I thought I was doing great. I went down. I was completely devastated, right? I took a huge position. It was like 30% of my portfolio at the time. And now we've spiked up suddenly, like, wow. And of course, we all know why. This inflation, the CPI data was high here in February. And yeah, that has caused a lot of folks to panic. And there's great reason for that. And Barrick has just made some huge gains because of this. They have went up like, 20% in a couple days, went up like 7% 2 days ago, 5% yesterday. Today they're down a bit, but yeah. So Barrick Gold, I have quite a bit of a position in this company, but I want to go over some of the fundamentals of the company. So if you look here on Simply Wall Street, Simply Wall Street helps us take a look at companies and get a quick look at the fundamentals, at their value. Is it a fair price that they're valued at this moment? Are they undervalued? Are they overvalued? Their financial position, are they in an overload of debt, and all these things. So first of all, Barrick Gold engages in exploration, mine development, and production and sale of gold and copper. So they have some rewards here that analysts have given them, and that is that they're below estimates of their fair value, and they are forecasted to grow with 4.5% a year. That is a lot of growth for a company like this. I don't know if they will be able to hit that, but yeah, there's apparently no risk checks here. So the value is the first that we'll get into here, and they think it's very undervalued. I will say, banks, analysts, they are very bullish on gold right now. They are all saying, if you go in here, right, you can see here, they're all saying like, okay, right now they're saying hold, but like a couple days before the earnings came out, it was all just buy, strong buy, right? You can all see here the recommendation, the average recommendation is a little bit above buy. So analysts, they really like gold in like as a whole, and Barrick as well. And it's not that Barrick is a bad, like fundamentally a bad investment, but there is some flaws that are better there are like better options in my opinion. So after having looked into this, like when I bought the stock, it was kind of a panic buy, and that was my fault. At that time I was a very new investor. I'm still a very new investor, but I didn't know what I was doing. So I just threw my money into the first gold stock. I like researched Newmont, Gold Corporation, and Barrick. And Barrick looked as a better option at that point for me, so I bought that. I'm glad that I'm going to be able to. Looks like I'm going to be getting out of Barrick with a bit of a gain, but I'm also going to get out of most of my position here in a bit, and let me explain a little bit of my thought process in just a minute, because I've written it all down here. So the future growth is they forecast almost a 5% annual earnings growth, and that is, I think that is a lot for a company that really, it really all depends on the underlying asset, which is gold, mostly gold, and a little bit of copper. So if gold goes up, this stock goes up, and that's why you can see here that this stock has been much higher, but that was because gold was so much more valued here, and it has really declined, and every time there's like been a recession and inflation has been high, all these things, a lot of insecurities in the market, the stock price has gone up because gold has gone up. So yeah, it really depends. I don't think it's really hard to like forecast a growth, because you never know, right? You can't really look at the past performance here, because that is determined by the gold price the past few years, right? So it looks kind of good, the financial health right now. You know, the short-term assets exceed their short-term liabilities, the long-term assets exceed their long-term liabilities, but the short-term assets does not cover the long-term liabilities, which means they won't be able to pay off all their debt right now with the assets that they have on hand. That is not possible for them, but long term that is not a problem. But we want, generally speaking, we want the short-term assets to exceed the long-term liabilities. So that is already one red flag right there. But the dividends has been growing tremendously here. 1.5%. They have just said that they want to increase that because of the increase in gold price and their revenue going up and them beating their earnings. Now they want to pay out a little bit more dividends. And I heard some analysts talk about like 3% dividends. I don't know about that, but definitely going to be a raise here March the 15th. And also I'm kind of maybe staying around till that time. I'll talk about that later, but I really would like that dividends to get paid out, and then maybe cut my position a little bit down after that. But as you know, maybe you don't know, but all dividends is not great. There's things called dividends traps where they pay out simply so high dividends, and it's not sustainable. Basically, that is all the cash flow going right into dividends. But here you can see that it is sustainable, because you can see that their payout ratio, this is all of their earnings, and they pay out 32% of their earnings to their shareholders through the dividends. And in the future, they think that is going to be 55% of their earnings, and that is probably considering this bump that is going to happen in their dividends payout. So they are going to pay out a lot more dividends, and this is actually going to be a very attractive dividends investment. So I would say 55% is a little bit high. You normally want that under 50%, but yeah, it's not it's not determined yet, right? Because right now it's looking very sustainable, so we don't really know where it's going. We will have to wait and see. So for the management team, we have an average 3.1 years of average tenure, and the CEO is pretty new, 3 years as of being a CEO. And the ownership, people have been buying this stock. They've been buying the past 0 to 3 months, and they have been buying in the past year. So some shares are getting traded here inside of the company. And here's the ownership breakdown. Yeah, so that is Barrick, right? Now I want to get into what I'm doing in terms of the stock here. So March 10th, 8 a.m. Eastern time. That is when CPI inflation data for February comes out. And it's going to be very interesting to see, because I don't think after having, it's really like 50-50 kind of what happens, right? Because it's in a way unlikely that CPI will go down, because it has like uptrended in so long. So, but still at some point it's going to turn down. But I don't think, this is my own opinion, I don't think that the inflation will start to decline year over year before the Fed starts raising rates. And the Fed meeting is March 15th to March 16th. So that is also like in the middle of the dividends payout. This could go both ways. Like I kind of want to at least cut down my position and take my gains. Of course, I don't know where the stock is in a month, but I reckon it's somewhere around this level. I kind of want to take some profit before the meeting, because what I think is going to happen in the meeting, I think you know, everyone knows that the Fed is going to raise their rates, right? It's a question of like 0.25% or 0.5%. But I think most people know also that 0.25% is not going to be enough, and we're going to see 0.5 point. And basically, if you don't know what this means, you know, the gold industry is greatly affected by inflation in a positive way. When there's inflation, gold goes up as an asset generally. So that of course benefits Barrick. And the thing is, when the Fed wants to raise rates, their whole idea behind doing that is to bring down the inflation. So basically, you can see how Barrick's stock price depends a lot on what they're doing in this meeting, what they're going to do in this meeting. So yeah, maybe it's best to take some profits before this meeting, because there is probably going to either go a lot up or a lot down depending on what's going to happen. But something that I've seen generally is when people don't think about rates as much, but like the general public that are not really into it, but when they like get that information backed up, when there is a meeting, when there's a headline saying we are raising rates with 0.25% more than we anticipated, although everyone knows it, everyone is like, okay, yeah, of course 0.25% is not going to be enough. Still, when they then get that information that we are raising with 0.5%, although that is nothing compared to what we've done in history, then people they panic, right? They want bonds, now they want this out of the stock market. So I'm definitely looking to take profit on Barrick, also because I do see some red flags here, as I spoke about earlier. I do see some red flags, although analysts seem to like the stock. There are definitely other alternatives. Kirkland Lake is here, probably a better alternative. So it's not that I want to get completely out of the gold industry. I just want to get at least a bit of distance to Barrick. Maybe I want like max 5% of my portfolio in Barrick. Right now it's way too high. So my whole thesis is I want to take some distance to Barrick, because I do not think that it is the best opportunity out there. But they have just made themselves a bit more attractive here with the dividends payout increasing, and they also announced a share buyback program. They're buying back $1 billion worth of shares, and right now it's $40 billion the market cap. So that is going to increase the shareholders, you as a shareholder, your position in Barrick. But so that is of course an attractive thing, because I think they have actually been diluting their shareholders over the past years, not this year but last year, if I'm not mistaken. So it's great to see that is going another way, but still I'm not such a huge fan of Barrick anymore. Hate on me in the comments, but I'm probably going to go over some stocks here I'm probably going to go over some stocks here that I think are better alternatives. Hope you enjoyed this video. If you did, make sure to like and subscribe, and I hope to see you in my next video. Have a great rest of your day. Bye bye.